AMC stock is up about 3% here on the day. The broader markets are going through a face ripper rally, and like Heisenberg says on X, if you have a stock that is in the red today, it's probably not a terrible idea to sell that stock. Hashtag not financial advice. That's what he said. I'm just relaying the message. Now, here in this video, we're going to get into everything you need to know on tomorrow's data report, the retail sales, what could be good, what could be bad, and how that could affect our markets. Now, what in the world is going on with Fed policy? Markets are expecting dramatically different things than we were expecting yesterday, and that's because the data came in much better than expectations. Now, the Russell 2000 is the big outperformer today, doing over double the return of the NASDAQ. You are up almost 5% on your Russell 2000. You have not seen this since the recoveries of the pandemic, Rona lows. That is insanely spectacular, and what a great day to be a small and mid-cap stock investor. We're going to go ahead and get into all of the data you need to know on AMC stock. We're going to look at what other individuals are saying about inflation, about the Fed, about our markets, and then finally, where AMC stock is going from here. So we have a lot of work to do. The work is cut out for us here in this video. This is the second retake. I got all the way to the end of the video, and then I looked down here, and I did not see a red record sign. So yeah, we just did this video once already, and it did not record. So hit the like button and subscribe to the channel for the commitment and dedication to bring you guys this information. Most individuals would probably call it quits if they just spieled for 20 minutes and it was nothing. It's actually mentally harder than it might look. Now, let's go ahead and get into all of this information. Let's start with Nick Timiraos and what he said today on the inflation report. Now, he says, the October payroll report and inflation report strongly suggest the Fed's last rate rise was in July. The big debate on the next Fed meeting is shaping up to be over whether and how to modify the post-meeting statement to reflect the obvious. The central bank is on hold. Yeah, there is zero chance the Fed is going to be raising rates again. Like, quite literally, 0% chance the Fed raises rates again. Nick Timiraos also shared this. The share of U.S. households reporting that it's harder to obtain credit than 1 year ago is hovering near the high in the New York Fed's consumer survey, which is around 10 years old. So yeah, it's very hard to get credit. You literally have to jump through freaking hoops. Now, Heisenberg is the one that said today at 11:57 a.m. Eastern Standard Time, if any of your stock is red today, get rid of it. And yeah, I think that's probably a good rule of thumb today, unless there's, you know, some kind of reason why your stock is red. Yeah, you probably shouldn't hold on to a stock that is red today. Even AMC, I mean, AMC's up 3%, and look at what that stock has done over the past 2 years. Just even in the last 2 days, look at the news we've gotten. Bad earnings, as well as a Marvel movie that is completely flopped. I mean, it's pretty simple. If your stock is green today, it might do better than not in 2024. We'll see. Obviously not financial advice. Ross Gerber took to Twitter today, or X, at 8:50 a.m. right after the inflation report came out, and says inflation is dead. And yeah, I agree with that. Inflation is certainly dead at this point. At least that is what your headline month-over-month number would tell you of 0%. You're almost in deflation, which at this point maybe wouldn't be so bad. Typically, deflation is actually worse than inflation, but considering the inflation we've seen, you could make the argument a little deflation would not be terrible. At this point, Charles Payne says, it's the most wonderful time of the year. Short squeeze season. And that's exactly potentially what we could see here soon. Short squeeze could be on the table, even for a stock like AMC. Now, you have to make the argument of, hey, AMC stock, its market cap is about $1.5 billion. AMC's almost going to have that same amount of capital in cash in the bank account. If AMC is not burning through cash anymore, well, the valuation for AMC might be a little too low, even considering we have seen a lot of dilution, and we're probably going to get even more dilution. Now, Wedbush analyst Alicia Reese now expects the company will post earnings per share of 34 cents for the quarter, up from their previous forecast of 53 cents. So going from 53 cents to 34 cents. These are losses they're talking about here. Wedbush has a neutral rating and a $19 price target on the stock. $19 price target. We're trading at $8. $8 hollers. Come on now. Give me a break. Especially if we continue to see treasury yields fall the way that they are. I mean, yeah, stocks probably can go even higher from here. And that's probably the best part of all of this. 10-year treasury yields at 4.45%. Still very high. We're just coming off of, well, a lot higher levels at 5%. It's like you've gotten over 2 rate cuts in the past couple of weeks here. Even today, you're down 17 basis points on your 10-year treasury yields. That means that you've almost seen an equivalent of 1 rate cut today alone. And that's why stocks like the Russell 2000 are massively outperforming the markets today. Russell 2000 is up 4.85%. NASDAQ is only up 2%. So yeah, capital flowing back into areas of the markets that have been highly depressed and squeezed of capital for a long time. Now, the story is not over. Bond yields could fall a lot more on tomorrow's data. Now, retail sales month over month are expected at negative 0.3%. The reason for that is CPI coming in low today. You were expecting negative 0.1%. Now, that had to do with data yesterday that we got that had the estimate at negative 0.1%. This CNBC NRF retail monitor tracking car transactions basically is showing us 500 billion in sales for October and weakness in gas station sales, electronics, appliances, furniture, and home stores. So it looks like that retail sales number could just come in at negative 0.3 or negative 0.2, and that would actually be great news. Now, there is a fine line between retail sales coming in so bad that it looks recessionary or retail sales coming in just bad enough that it looks like the Fed could cut rates sooner and at the very least maybe not stay higher for longer. So there is 2 different narratives you want to be watching for tomorrow. Economy deteriorating, or we just don't need to be higher for longer. That's going to be important. I do think the retail sales probably going to come in at like negative 0.2, maybe negative 0.3. It could come in way lower than that, though. Keep that in mind. Government data is a little bit wonky. You never truly know. But 0.2 negative would be my personal expectation. Now, PPI is also going to be important because PPI stands for Producer Price Index. CPI, the one that we like to pay attention to on Wall Street. PPI is important too, but CPI is really the one that gets the headlines. That is Consumer Price Index. Or you can think of it Consumer Price Inflation, Producer Price Inflation. Now, what happens in a typical business cycle? If producers see inflation, they tend to pass cost on to consumers. So PPI can be a leading indicator to CPI. So if PPI continues to fall, or just stays at low levels. Last month, you were at 0.5%. The previous 2 months before that, so the last 3 months now, you were at about 0.5, 0.6 back in, what does that look like? August. In September of last month, you were at a half of 1%. Now you're expecting 0.1%. So you're actually expecting, you know, some pretty good numbers there as well. That could also fuel some optimism here for the Fed policy and ultimately, hopefully, getting that soft landing. Now, like I said, literally there's a 100% chance you do not see another rate hike. As of yesterday, for the meeting of December 13th, there was a 20% chance that you would get another rate hike, at least 1 rate hike in December. Now, it's a 100% chance of no rate hike. January 31st is also a 100% chance of no rate hike. March 20th, you're expecting no rate hike, no rate cut. 72% chance the Fed continues to hold through March, with a 28% chance the Fed actually cuts rates. Yesterday, there was a 9.6% chance the Fed would cut rates at least once, and a 63.2% chance that the Fed would would keep rates steady. Now, there was a 25% chance you would get a rate hike by March and a 2.4% chance you would get 2 rate hikes by March. So you basically unpriced like 26% of a probability of getting at least 1 rate hike by March out of our markets today because of the CPI report. That's why bond yields are falling so much today. That is why stocks like small caps are rising so much. Now, the first rate cut is officially being priced in today by about 58.8% for March 1st. Now, March 1st is interesting because there's a 21.5% chance the Fed continues to hold through March, and there's almost a 20% chance you get 2 rate cuts by March or by May. So, yeah, a couple good data reports or maybe a bad retail sales data report and a really, low PPI report, you could actually start to price in maybe the first rate hike or rate cut in March. Or at least they might be a little bit closer to like 50-50. And we'll have to wait and see what the Fed says if they want that priced into the markets. I don't know if they want the first rate cut in March actually priced into the markets, but we'll see. Maybe we could get some confirmation from the Fed, from some of these Fed speakers when we hear them. We heard relatively good things from Fed speakers today, like Fed Goolsbee and other members as well. Now, let's get into a little bit more of your data here with AMC stock, and then we will discuss how high I think AMC stock can go from here. So if you're looking at the cost to borrow average, that is 1.5%. Cost to borrow minimum at negative 0.2%. Cost to borrow max at 2.32%. Live short interest of free float, 10.18%, which is a lot higher than where it was previously, around 6%. $159.06 million worth of short positions. Days to cover 0.87. 20.13 million shares that are currently sold short. Shares out on loan 21.2 million. Cost to borrow 1.31%. Utilization of 48.58%. And a short score of 60.77 out of 100. Now, the upside that we get from here is probably going to be helped in part by a potential gamma squeeze. You do have in the money calls expiring this Friday at 11,000, calls out the money 143,000, puts in the money of 22,000, and puts out the money of about 59,000. So there's a lot of dry powder, if you will, on the sidelines that could help fuel a rally higher for AMC stock if you do get a continued move lower in bond yields and a continued, influx of capital into the Russell 2000. Now, specifically, what I'm expecting here for AMC stock is a recovery to the upside. I don't think that comes to you guys as too much of a shocker here, but AMC stock is $8.17. I think it is massively depressed from where it probably should be. I get it, dilution. I understand these things. Hopefully that dilution starts to maybe be expected, that it doesn't happen anymore. I mean, as you get better earnings from AMC, I think this time is very clear, given what you're seeing in the markets. If AMC just waited to announce that dilution, AMC stock might be $20 per share right now, right? If AMC just followed through earnings, the writers actors strike ended, and did not announce dilution, I believe firmly you would be in the high teens, if not low 20s, if at the bare minimum, right? So I think AMC might just learn their lesson at some point, that you might want to wait to dilute shareholders because, I mean, the stock wants to rally. You just keep beating the stock down. So I think that's important to keep in mind. As far as where I think AMC stock could go, getting back to $11 per share sounds pretty good to me. That's the point you were at before AMC just reported their earnings. And if the markets do get really squeezy and you do see a lot of capital flow back into the markets, AMC stock could obviously go higher than that. But I do think some good news here would obviously be really good for AMC, considering, I mean, besides earnings being really good, we haven't got any good news in quite a long amount of time, guys. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with us live in real time, we did make a trade on PayPal today, as well as a trade for Target earnings tomorrow morning. If you guys want to come see that, come get involved with that community. Link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.